And a very good afternoon here on the 27th of April 2018. My name is Rishi Patel, co-founder of Master the Markets, the Elite Traders Conference, and the Traders Open Day. And it is a Forex Friday here on the 27th of April. It is Friday, of course, and that means the usual end of the week Master the Markets update. And you join us in here on the Forex Friday on the 27th of April, in one of the best weeks in history for the Master the Markets trading floors here on both the Vedanta Elite as well as the live trading room. Cumulative performance coming in at 11.68% for the week this week alone, Monday to Friday for closed trades. 515 pips, representing £5,150 in just 1 week. And I'm going to be breaking down the trades and the opportunities that we have closed out this week according to the rule sets, the quantified methodologies that we use here. I'll do that first, and then I'll go over to the topic of this week, which is, of course, how you can construct a quantified and detailed trading plan using the crib sheet available, of course, in the Traders Essentials kit, and how you can use that to your advantage to create yourself a plan, a trading plan, which is quantified and which is giving you absolute clarity of when to enter the market and when not to. I'm going to break that down with examples of trades from this week. I'm also going to show you our account statements that we've collated over the week this far, because what we do here at Master the Markets is not only call the market live in real time with the trades that we ourselves are taking. Remember, of course, it is an educational service for the trades that we're taking, but what we also do is we take these on trading accounts as well, which we've specifically set up to create a track record for ourselves to illustrate the truth of trading, which is what is possible in these financial markets, and what is possible in terms of making an additional income alongside whatever it is you may be doing, whether it's property investing, whether you have a consultancy role, be it IT, engineering, or otherwise, or whatever profession you're in, really, how you can accompany your income. And I'm going to show you how we've done that this week and how some of our customers have also done that as well. So let's kick off by looking at the Elite trading room. So we'll start by looking at Vedanta Elite, and Vedanta Elite have closed a trade on swing profits yesterday. Why don't we look at their journal? Here's the Euro Japanese Yen, which of course was opened on the 25th of April and closed at midnight UTC on the 27th of April 2018, just there. And so that has been closed out. And let's just check that I've updated the column per se. Yes, I have. So we're out of the market on the swing profits trade, Vedanta Elite, at 132.36, representing a 0.8% profit, 52 pips of upside just there on the Euro Japanese Yen. So we're out of that trade, just 2 days on the swing profit system. Why don't we review it on the chart just here? Where did we get into the market? Now let's take a look. What I'll do is let me just put this side by side for the actual chart, so we can actually map out how we actually got involved with the market this week. So let's look at that just here. So this is the Euro Japanese Yen. We entered the market at this price level here, which is 132.88. We're short the market, 132.88. So there you can see 132.88 we are short. And where did we get out? We got out on the close of the bar just yesterday there. And so we're out on the close, 132.34. You can see that I have updated that one just there. 132.36, including spread. Of course, we have to add spread. Everything here is done actually realistically. So if the close of the bar is X, remember, we're going to add spread because we're really taking these trades on a trading account, and we need our journal to reflect our trading account. This is one of the things we do over here. It's totally transparent, and you can see in real time the profits being generated, not only just on a video with a historical update, but actually all of the videos that have been taken in real time calling these trades. Not only that, but on account statements as well. So that of course has been updated. We're out of the market there. We entered short. We took our money off the table after those 52 pips, and we're out of the market for 0.8% profit there on the Elite Trading Room. And that's the only trade this week on the Elite Trading Room. Let's now look at the live trading room. So let's go ahead and save the changes to that journal there. And let's look at the live trading room. I've already shown you the graph. I want to say this is one of the best weeks and one of the best months, the second best month in history on the live trading room since we started, of course, since 2012. It's such an aggressive month with a 10.86% upside. You can see we started the month here, and this is on the system, but we started the month here on the cash with 2.11% up. We are now 11.74% up on the cash curve here at Master the Market. So you can see the big jump in the equity curve. If you look at the equity curve overall from 2012 beginning, you can see we had a good initial move, then we had a little drawdown period here, and then today you can see this week and these last couple of months how the equity curve has started to jump. And that's because of the introduction of the new trading models with the new quantified systems, as well as some of the signals that we're feeding in from the Vedanta elite rooms as well into the trading opportunities that we're taking here. I'm going to show you two of those trades that we took, which is one of the elite signals as well on gold bars. So you're going to see how this equity curve and why it's jumped in this way. Let's start by looking at the Liftoff 3.0 trading model. I'm going to review three trading models here today that we've taken trades on this week. We've closed trades on this week in the live trading room, and that is Liftoff 3.0, Money Bars 2.0, and then of course Gold Bars, which are the three models that we've taken trades on and closed trades on this week in the live trading room. Let's look at all of these. So the first one here, of course, is on the Aussie US dollar, and that was closed this week. I'm going to insert this actually into here, and I'm going to relabel this as trade number 12, and this is trade number 13, because the Aussie dollar actually closed after the dollar yen. Now, there was a little bit of concern here, because if you look at the drawdown that was being taken on the Liftoff strategy over the last couple of months, you can see we were down minus 3.78 on cash, and then what happened as a drawdown, that was at least. So we had this drawdown first of all, minus 1.4%, a small, tiny small profit there, and then another drawdown, minus 2.41%, and then you can see you've got a 3% win that's come into the market and flushed out all of those losses and taken us up towards a positive equity for cash on Liftoff towards the end of April, which actually tallies up with the last 5 years and matches then the testing that we have historically, which of course proves that the models are doing what they're meant to be doing. This Aussie dollar trade, take a look at this. This was an interesting trade. We entered the market short on the 16th at 7749. So short, we're selling the market. We're expecting the market to drop away. So 7749, we sold the market. Let's do a side by side on this one again here, and we can look together at the trade that was taken, in fact, on the Aussie dollar just here. So let's go ahead and pull this open. And if we look at the Aussie dollar here, so the Aussie dollar, of course, we took short, as I said, at 7749. That is this price level just here. So we sold the market short on this green bar, this buyer bar just here. On the 18th, we got into the trade. We're just going to modify that slightly because we put the order on the 16th, but we got into the trade on the 18th. On the 18th, we short the market from this level, and from this point, when this green bar triggered us into the trade and moved against us, initially it looked as though that was going to stop us out. Our stop loss was where? Our stop loss on the market was 7814. Now the interesting thing is, if you look at 7814 on the market, 7814 is actually here, and if you look, 7814 is actually there. Look at how close the price came to our stop loss. Look at how close the price came to our stop loss. It came within a few pips, and technically we should be knocked out by the spread. So the stop was 7814. Look at the high of this bar. The high of this bar, if we break open the little data window here, the high of that bar was 78118. But we stayed in the market. We held the trade. We weren't fear-stricken, or we weren't panicking or anything like that when this price was moving against us, because we have a mathematical edge in the market which we know and have confidence in, which will keep recurring. And one of the things that was discussed in the elite meeting, the Vedanta elite meeting this week, was of course the law of numbers, and how we combine the law of numbers with probability, with reward risk, and put all of these things in our favor to of course generate these models. And that's why when this was moving against us, we were not worried. We held the trade, and we held the trade short, and down it came, and it came all the way to our target. Of course, the liftoff is a slower model. It does take longer runs. It takes longer to achieve its profitability, but it is an excellent model in the arsenal combined with the other trading models that we have. 7554 was the target we were looking for, and here you go. 7554 is all the way down here, and it was just hit on this particular day, 25th. We would just hit the profit target. It came back up, and we were out of that trade opportunity. So we held the market all this way through. We of course trailed our stop loss, which is one of the things I want to talk about a little later in the topic for today. We trailed our stop loss in the market as well, and we of course minimized any potential move against us. And you can see now we are of course out of that market for a full 3% profit, for 195 pips of upside over the number of days that we held that, which of course is a total of 6 days. So we're out of that Aussie dollar market. That's 3% for us. Out of the 10.86 that we achieved, that was 3%. Let's look at the money bars trade that we took here on this euro US dollar. And again, look at this euro US dollar. If you just take a step back from the chart, let me close the data window. If you just take a step back and look at this Aussie dollar since the beginning of this euro dollar, since the beginning of this year, look at how the accumulation, the sideways consolidation that we've been seeing here in this market. There's been literally no movement whatsoever, yet the money bars trading model has been able to capture some superb moves here in this on this euro dollar, even in this sideways market. And this is very much testament to the fact that all of the strategy models here at Master the Markets do back each other up. It's not just about any single one strategy that you take at any given time. These models all backing each other up. So while liftoff may be taking small controlled losses as a drawdown, and that's okay, and we'll demonstrate and publish those results as well, the money bars model is of course tidying up. And the money bars model for this year so far, if you look at our journal here on the live trading room, of course every trade taken in real time, transparently published to all of our customers as trades we are taking ourselves. It is purely educational, so trades we are taking ourselves. You can see the money bars model is up 6.8% for the year so far, representing 385 pips over just 5 trades. It's got an 80% reliability at this time, only one small losing trade, and that is absolutely the pure genius again of this money bars model here as well. So please observe the trade that was taken here on this euro dollar. What did we do? We entered the market at 123.71 short on the 17th of April, and that was on this seller bar just here. You can see the price level 123.71. We entered short there, and we used a very tight stop in the market. We used a stop which was 124.18, and that is represented by this price level just here. And you can see the market did not travel back to our stop. You see we shorted the market on this particular day here, and the market did move against us, but it came all the way back down, and it took us out on our profit target, of course here at 122.37. 122.37 is of course the profit target that has been achieved here on this money bars model. And you can see that we hit this this level. Let's draw 122.37 here on this chart. There you go. You can see on this day here, this large seller bar, it pierced through the target, and it took us out for a 2.85% profit, or 134 pips on the euro US dollar just there. So a superb little trade there. Followed the plan precisely took a very tight distance between stop and entry, giving us that great upside here on the live trading room. Of course, the money bars model, one of the best ones that we have here, along with the liftoff model and the gold bars models, all complementing each other. You see, while the beautiful thing is, even though the liftoff was taking a drawdown, a small drawdown this year, the money bars model was really tidying up and giving us 6.8% upside. So we were always profitable even from the beginning of the year, which is absolutely superb. But patience is the key. Take a look at this. We never had a signal for the first 6 weeks, for the first 5 weeks of the year. The first trade that we took actually was on the first trade we took this year actually here was on the February the 12th and the 11th, both money bars and liftoff, not giving us any signals for the first 6 weeks this year. But again, it's no cause for concern here at Master the Markets, because we have an exact idea of how many trades we're looking to expect, what's normal for the system, and absolutely everything has been mathematically quantified and taken into account over here, and this has all been published on some account statements. So I've already shown you the liftoff trade that we took on the Aussie dollar, and now take a look at it on my account statement, because this is what we do here at Master the Markets. We publish our account statements, and now what you can see in front of you transparently is my account statement with the drawdown that was incurred, and then of course with the upside that we've witnessed this week itself on the Aussie dollar. Take a look at that profitability. £1,553.78 of course is the upside just there on the Aussie dollar model. A superb little trade there, which has wiped out all of the losses. Look at them. Look at the journal. Look at the account statement historically. Look at the small losses that were being incurred. Minus £103, minus £68, minus £189, minus £223, and then look, plus £1,553, wiping out every single loss that was incurred here on the liftoff account statement, and taking us into profitability for the year so far. We of course started the liftoff account statement in June last year, and we've been tracking every single trade up until of course today, and you can see just on the 18th we took this opportunity. We closed it on the 25th of April. That is just 2 days ago, banking £1,553.78 on the liftoff. And the trade that I've just shown you as well on the money bars, why don't we also review that as well? Take a look at this. This is the euro dollar trade, giving us a 2.85% upside. 3 lots. We took that short just there. You can see we opened, as I said, on the 18th. We were out on the 23rd by that bar, and of course that's giving us £2,868.80 of upside, taking the entire account into positive territory. And you can see this on the graph, the equity graph of the account, how we've wiped out all of the losses in just the last 5 trades. Look at the last 5 trades on the money bars account: 1,128, 1,973, 1,035, 1,057, minus £320, plus £2,868 are the last 5 trades on the money bars, wiping out all the losses that were incurred and taking us into heavily positive territory just there of £1,800. Let's finally review the last 2 trades from a new model here that's being rolled out in the live trading room. It is of course a beta, which means it is of course in testing mode, but let's take a look at the 2 trades that we took here. Of course, the first one on the euro US dollar, and that was on gold bars. We short the market, a very tight little strategy, actually one of my favorites because it gets you in and out of the market very quick. And for those of you that know my trading style, you'll know that I like to be in and out of the market very, very quickly. And of course, this is what the gold bars model does. If you're wrong, you know about it very, very quickly, and if you're right, you also know about it pretty much the same day or the next day. Let's take a look at these 2 trades. So euro dollar, let's take a look on the graph first, and we'll come back to the account statement. So the euro dollar, we took the market short on this bar just here. Of course, take a look at this. This bar may be a bar that people may have thought, hey, I'll jump into the market long, it's a reversal. But at Master the Markets, due to a very heavily, tightly, mathematically sound model, we know which one of these bars with very high probability will have a reversal in the market. And of course, we've taken it short. So take a look. We entered the market at 122.34. And of course, remember, every single one of these trading opportunities was called live in the market before it was taken. So we actually informed our customers that we were taking these particular trade opportunities, our own personal trading signals. They're not for copying or anything like that. Of course, it's purely educational what we're doing here. At 122.34, we entered the market. Our stop 122.62. And of course, look at the stop. You may think initially that this stop has been generated in a very random way. But actually it's not. This is again a very tight mathematical calculation which stacks probability in our favor of where the price will travel to if it's going to go against us first, and at what point we'll know that we're wrong in the market. So that's absolutely brilliant here. We put the stop in up here. We've got a very tight stop. Look at the number of pips of risk. We were against 53. So 28 pips of risk against 53 pips of upside target. We took our money off at 121.81, and you can see we realized that profit of 1.89% or 53 pips the same day. It took less than 24 hours, and the majority of this move was made while we were sleeping. So before most people were just traveling into work, this trading model had already hit its profit target. And what did it make? It made £948.70 risk managed in just a couple of hours. And then let's take a look at the final trade for this week, which is of course the GBP USD. GBP USD 25th of April 2018. Let's take a quick look at that. So that one, you can see we entered the market at 139.91. And that is this price level just here. So you can see again, look at it there. You can see we entered the market short. Where was our stop loss? Our stop loss, of course, was 140.22. Everything very tightly done here at Master Markets. There are no sort of entry zones or regions or buy levels or rough areas of buying or selling. We're talking about precision here, to the pip. Everything has been mapped to the pip. So understand that, you know, everything has been done absolutely accurately. It's irrefutable, basically, and that's the way we wanted to design those models. So 140.22 was where our stop was. We entered the market at 139.91, which is just here. And there you go, you had a stop of how many pips? You had actually a stop of 31 pips against 74 pips of upside, representing 2.39%. So giving us a total of 4.28% in total on the pound against the US dollar. So an absolutely superb little opportunity just there. And you can see it didn't hit target for us on the first day, but on the second day it did push lower. It took us out on our target. And some people may say, but look, it looks as though the bar has gone up first and then traveled down and taken us out on the stop. Well, our account statement says something different. You can see here we realized profit for £1,193. We were already out of the market for a profit, bringing the gold bars account up £2,148.39. 4.3% this account is up already. And you can see that our accounts are all in positive territory. So it's a fantastic start to the year for us as far as we're concerned. We are teaching our customers how they can create another income from the market by using these excellent technical tools fully quantified. Let's go on to the topic of the day. And let's talk about creating a sound trading plan. So I want to go over this today. So this, of course, is my trading plan. So we call here we call a trading plan here at Master Markets a crib sheet. We call it a crib sheet because it's a set of documents that you want to keep next to you when you are actually trading the market. You want to use these as reference materials, because what you really need in the market is clarity. The way we're able to achieve the profitability that we are is through clarity, and we are exactly clear about which trades should and should not take. There's no gray area for us because everything is tightly quantified, and this is the only thing that allows us to be as transparent as we are, showing you our trade journals. Other people may profess that they're transparent and honest with their trading results, but when you ask them for their trading accounts, that's where the conversation normally is tied up. But for us here at Master the Markets, we are very happy to show you our trading account statements, our personal trading account statements, ones we created for track record at least. You can see them, you have access to them. And you can see that we are consistently taking the opportunities, not only that we're calling, but then we're also profitable over the long term as well. The law of numbers works for us. The probabilities, the reward risk, everything has been stacked in our favor, and we're proving it. And the only way we're doing that is with a tight plan. So this is our trading plan. So you need to be clear about your concept and objective. I've covered this in a previous Forex Friday video several weeks back. You can actually go back in the archive of our YouTube channel and look up the Forex Friday video. You have rules for entry. You have 4 degrees of freedom. You have do not enter rules and cancellation order rules. I haven't spoken about these before, so this is new, and I want to cover this and explain the difference between the two. What is the difference between do not enter and cancellation order rules? We're going to go over that. Rules for stop loss, the initial stop loss, the trailing stop loss you need to know, and the rules for exit, pre-trade and intra-trade. So you need to know all of these things here on the when you construct a trading plan. It should incorporate all of this in a lot of depth, so that every single one of your parameters is quantified. So you see, if I switch over to a chart at this stage, if I bring you up a chart and I show you, for example, I've seen a lot of sort of traders work with things like trend lines and things like that. See, the issue with that is that they're just not quantified. I mean, how do you reproduce this and how do you scale it? It's just a very rough estimation, and unfortunately if you use a rough estimation when you're trading, then the high majority likely you're not going to be able to reproduce and scale your trading results. It will be guesswork. I was speaking to another trader at the Trader Social event we held a couple of weeks back, and he told me that he has a much better upside than anything we were demonstrating, and he said that he's achieving an 80% reliability on his trading system. Because I've spoken to so many traders over the time, because between myself and Thierry we've coached well over 25,000 people in this space, I knew straight away that he was using a trading model which didn't have a stop. And even though he was using, and he had then went on to admit this, even though he's getting 80% of the time he's making money, the other 20% of those trades are absolutely wiping him to pieces, and absolutely that's not a conducive way of trading. And it's because it's subjective types of parameters are being used. You cannot do that. What you need is a steady system of consistent execution with quantified parameters. So your trading plan needs to have quantified parameters. Your 4 degrees of freedom need to be quantified. And I'll give you an example of quantification. I mean, if you just take a bar, for example, because we're pure price action traders, if you take a bar, for example, we will quantify the bar, and we will look at the open, the high, the low, and the close, and the different combinations that can then be made with 5 different bars. If you've studied our previous YouTube material, you'll understand exactly what I'm talking about, how we take a set of bars and can make powerful combinations with them that keep making recurring price action pattern through probability, through the law of numbers, through reward risk. So understand this, your crib sheet first of all, and here is a template for you. Your crib sheet, first of all, you get the concept, the objective. You need to get that right. What is the concept? What's the objective of your trading strategy you're building? Most traders don't even start with this. They don't even know why they're building the trading strategy or what it's meant to achieve. And what's the point of that? You need to study, go back and look at some previous videos we've made on concept and objective. The next thing you need is some entry rules. Why are you going to enter the market, and with which level of quantification? So I'm looking at on my other monitor I have open, for example, the liftoff crib sheet, and the liftoff crib sheet, the liftoff 3.0 model, of course, is the one we use in Live Trade Mentorship Advanced, and of course we use other more advanced models in Vedanta Elite. But what we're doing here, of course, is we've quantified all of the rule sets. So for example, we will look at a particular price action pattern and say, hey, you know, the close of the next bar needs to be above the high of the previous bar, and we will look for specific quantified rules like that. So you need to have quantified rules inside your rules for entry. Then you need do not enter rules and cancellation order rules. What's the difference between these? So the do not enter rules are basically rules that will not let you even place the pending order. So if it's a system that's going to use pending orders, or if it's a system that's going to use a live order, it tells you do not even enter the market if X, Y, and Z happens. So what's an example of that? Let's say that you only want to take trades which have a trade risk of less than 100 pips, right? So if distance between entry and stop loss is 120 pips, that would be a do not enter rule. But a cancellation order rule is that once you've placed your pending order, what happens in the market for you to then cancel that order? What makes that order invalid? So that's what a cancellation order rule is. So you need to take these all into account. And of course, every single crib sheet here at Master the Markets has this information inside because we're clear about what we should and shouldn't be taking. If you want to learn more about how you can get involved with the financial markets, come to the next live trading evening, which of course is taking place in the Saxo Bank office in Canary Wharf. You can see the description on the bottom of this video will give you a link to click onto if you'd like to come onto that and understand these models in a little more depth. It will be great to meet you all as well, because of course we're speaking to you on the blog or on YouTube, and that's, you know, a great connection to have, but let's enhance that and let's make that in person. You know, come along and meet us. And then on the next part of the script sheet, of course, is the rule set. So for stop loss. So now two parts of the stop loss. How do we put the initial stop loss? So are we going to put our stop loss, first of all, let's say on the low of the bar, or are we going to do the low of the bar plus 5 pips or something like that? What's our initial stop loss and why? And then also the trailing stop loss. How are we going to manage the trade? And the trailing stop loss, for example, for the liftoff model is quite detailed, because what we have for the liftoff models, we have multiple different criteria we can consider. So the first one is what's the trailing stop loss that we use before the swing high is confirmed, then after the previous swing is broken, then after we get what we call the first EC. All of these are different levels of trailing stop loss. So our trailing stop loss in the liftoff crib sheet is very, very detailed, and you need to know how you're going to trail your stop at any given time in the market. And then of course you've got your rules for exit, so the pre-trade and the intra-trade. How are you going to get out of the market and why? At what price level will you put your trade? Are you looking for a reward risk of 2 to 1, 5 to 1? What is it? So what's your pre-trade criteria, and what could happen intra-trade for you that you would want to get out of the market? So for example, a good intra-trade mechanism for exiting an opportunity is of course an outsider bar. So if you get an outsider bar that closes, let's say you're going short, and you get an outsider bar that closes above the 50% level, you may want to exit that trade opportunity, because actually that's going to give you a signal that there's potentially going to be a further upside move and you're trading the market short. So that could be an intra-trade, an example of an intra-trade exit rule. And again, I've gone over outsider bars in a lot of detail in one of my previous Forex Friday videos. Click onto our YouTube channel and just go back to the archives and have a look if you're interested in learning about outsider bars. It's a very powerful pattern in the market. But that concludes my video for today on the Forex Friday. I know it was a lot of detail, and I'm grateful for, of course, one of the best weeks that we've had here at Master the Markets, the second best month in history, at least in the live trading room. The Vedanta Elite room is also on track and making some superb profitability this year. Combined this year, the two trading rooms have made over 20% return in just the first 4 months of this year. And that is a significant achievement by way of any given investment. Most of the best property yields you can get in terms of buy to let will give you a 10% upside per year at the highest end, and that of course even in London of course is almost impossible to achieve, but 10% outside of London is what a property yield would be for a year In the first 4 months, the Master the Markets trading rooms have achieved a more than 20% return, publishing every trade in real time, taking every trade on account statements. That's what we do here. We're looking forward to connecting with you at a live trading evening. Click on the link below. Register for the next live trading evening. It's taking place in the Saxo Bank office in Canary Wharf. Even if you're from outside of the UK, it's well worth coming in. If you're going to be about in London anyway, well worth dropping in for one of these live trading evenings. I'd suggest you click on the link below, book a ticket for it, and we'll look forward to seeing you on one of those. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.